Good afternoon, traders. Welcome to this live webinar. My name is Chris, and Nenet, also known as Tarantula, is with us today as well. We're going to take a look at what the market is looking like, the Forex market specifically, after the big news event yesterday. Lots of stuff happening, so we want to organize our thoughts with you, and you can take a look together what we think about the market. And if you have any comments, of course, just send an email to info@elitecurrency.com, and we can read out loud your comments or questions. So what's going to be happening in the next few weeks and 2016? That's probably on all of our minds, and we're going to take a look at that in just a second. First, some formalities. For instance, the fact that trading for exchange and global financial markets is considered high risk may not be suitable for everyone. Therefore, please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only and is not intended or meant in any way as advice. And by continuing watching this webinar or the recording, you agree with this disclaimer and you're aware of the risk involved when trading. All right, thank you so much for your attention. We're going to take a look at the live market in just a second, just in case maybe you don't know us. There's a bit more information about us. We trade the Forex market primarily and also do some analysis with, for instance, Admiral Markets. And they won the UK Forex Awards this year of the best MT4 broker. So that is something maybe worth it. And if you're interested, actually, before I kick off, if you're interested in finding a good broker, look no longer, because Admiral Markets has won this award, has a lot of cool extra features that go with the MT4, 60 plus in the meantime. And if you want to open an account with Admiral Markets through us, you get extra advantage because we're going to give away the moving average course that is valued at almost 900 euros here for free. Once you sign up through our link, you add capital within 3 months and you trade one trade, even if it's a micro lot. So it's that simple to gain advantage of that course. And also on top of that, per 1.5 lots traded, you get a 10 euro discount for all of our systems and Harp, for instance, or indicators. You can use that for anything you can find on our website. So there are two good reasons, I think, to join Admiral Markets through us. And if you want to do that, take a look at this link right here at the above. You can see in blue. So that's how you want to take advantage of that. So some good value there, I think, that is available. One more other message on Harp. That's our system that Ned and I are trading with primarily. And Harp stands for Heikinashi Range Price, by the way. And just wanted to let you know, of course, we can say that we're doing well with it and trading well, but you might wonder, how about others? Is it possible for others to get the same results? And we wanted to share the story with you from Bob. He's been trading it for 8 weeks, which is already a pretty decent amount of time. And he wanted to let you know of the following. He found it a very easy to use, reliable, and robust system. Has made it his own routine in the meantime. And he likes how the bars work, how the trading system works. He had 53 trades, 43 wins, which is 81% success rate, and he's very happy. And this is his favorite trading strategy at the moment. So we wanted to share the story quickly with you to show that we stand behind our words, that we think that this is duplicable for traders that are in the market besides us, right? All right, that's basically the core message here I wanted to share. So if you're interested in that, we do have a special discount because we realize that the Harp system is not it's a bit price side perhaps. So what we wanted to do was make it more accessible for every trader out there, and we are giving a 1,500 euro discount. So if you don't want to miss out on that discount, you have the opportunity to capitalize on that till January the 4th. You can use the links there to find out more information about Harp, and also if you want to order. So with no longer ado, it is time to take a look at the market and take a look at what kind of volatility we had. I was a bit already pre-warning traders yesterday at the Admiral Markets webinar, strategy webinar Wednesdays, that I think there's going to be a lot of ups and downs. There's going to be a lot of volatility, I think, and that happened indeed. But let's see what, first of all, Tarantula thinks about the market at the moment. Let's test, first of all, if his mic is working. Let's see if you can hear him. How are you doing, Nenad?
Hey, Chris, I'm doing pretty much fine. Well, exactly as you said, it happened what we presumed it might happen.
Yeah,
So
indeed.
I'm pretty much now sideways concerning euro dollar. I'm waiting for more information. I will share the screen with you, and I will tell you what I currently look at.
Great. I stopped the
Okay.
screen sharing, so I think it's all yours now.
Okay, thank you. Let me just switch the screen here. I will show you the Harp. Okay, first we will start with Harp. And here you can see that basically what I'm looking at is GBP dollar. Actually, Harp system is in a confluence now with Camarilla MACD concerning GBP dollar on intraday time frame. So let's say that we are looking at rejection here at this spot to actually enter a full-time intraday setup. That will be much easier when I show also here with Camarilla MACD. I also did the analysis on Under Markets website, so traders could check it. What is the fact is that we had a breakout of L3, that is a breakout zone. So L3 was a breakout zone. Now we can see here easily by our indicator, MACD, used for Camarilla, that we have a bullish divergence. So here we can spot a divergence. We have a line here, and we also have a line here, okay? I cannot make it like this. I will use a simple trend line. So here we have a bullish divergence, okay? Price is going down, but the oscillator is going up. So bullish divergence happened just exactly at L4, which is very strong support. Now, if this support holds, and we get, actually, we have a hammer here, so there is a buying pressure. Now, we will see who will win, buyers or sellers. But if buyers win, we could easily see a potential, a breakout retest rate. So that is what I'm waiting. Currently, euro dollar is still really low to go higher, and it's really, I don't even take a look at it. But because it already made a target. As you remember, my analysis yesterday showed that it will hit 1.0850 if 1.0930 is broken, and it basically happened. Now, this is more interesting. If pound dollar hits this zone here, we could easily see a potential breakout retest rate, which will tank the pair towards L4, and the break of L4, we should see 48.55 on GBP dollar, which is the ultimate target now for this move, because L5 daily pivot point is here. So we might see it maybe later, maybe tomorrow, but potentially maybe even this day. Now, of course, this is too low to sell it now. So this is our primary interest, 49.55. But if the price does not get there, we might see a direct drop to this L5. Of course, how we do it, we never sell the support. So we want to see a better price to sell into. So it's L3, which is BRPOC. And eventually, if we get a high momentum, and the price does not make any retest of the level, but proceeds further with momentum, we could see 50, 50, 15 here, this zone, because EMAs will touch H3. That will be a perfect confluence, and this zone could be a good spot to sell into. It's also our Harp setup, so we are currently looking at GBP dollar short trades. The trend is to the downside. You want a pullback to be in the flow with the trend. So that is, Chris, what I currently am monitoring. Now, if you have anything to add, that would be good. You can always show your screen. Also, what I wanted to emphasize is that euro dollar. I will put euro dollar here. You see, euro dollar is not so good to trade. Currently, it's in a strong downtrend. You can see it here. It was downtrend, and now it is trying to make a W pattern. Now, this is actually Adam and Adam pattern. It's not the W in its full sense. It is, but it's more Adam and Adam because we see a double bottom here. Now, this looks like it might push higher. So actually, it's too low to sell it, and it's also is not too high to sell it either. So What I would be looking at is definitely some confluence with EMA 89. We have Adam and Adam potential, double bottom, and look at this. Perfect confluence with 50, EMA with 50% and EMA 89. So it's actually, this could be a selling spot. Now, you can also place trend line here. Let me do it. Okay, like this. So actually, if we do it, we can see an X cross here. So we can see an X cross, EMA 89, and 50 retracement. So actually, that would be very, very useful if we get the price to this spot. Let me see what Chris is saying. Okay, sound is okay. Okay, so Chris, you can continue. Basically, I shown what we are looking at, so you might continue with the presentation.
Yeah, sorry, mate. I'm here. Somehow I was looking for the unmute button and it was gone, and I had to chase it somewhere. Okay, I should be on now. Great stuff. I missed part of T's explanation because T's sound, netted sound, Tarantulas sound, and I call it T as abbreviation, disappeared there. So I'm not sure, and I hope I'm not repeating his words. But yeah, what I'm seeing basically, in my view, and that's a bit of a wave analysis, perhaps. Bear with me if you're not. Of your and repress it to the downside. From that point of view, I am a bit skeptical of the downtrend continuation. From that point of view, and think that actually your dollar is going to go into a bigger consolidation for the next couple of months. I mean, if I look at this hourly chart here, you that a wave correction. We're going to steamroll up. Yesterday, let's face it, it's already almost, and all it did was
I guess that we have some slight sound problems.
One of yearly low. In a difficult situation. Maybe you don't hear me, but maybe the others still do. Let me check. Let's see. All right. Hopefully the screen is Nana, do you hear me? Nana? All right. Let's see. Hopefully that's fine. Maybe he's just not there at the moment. Anyhow, the screen. Dollar was making kind of this movement. It did have some bearish pressure from here down to here, those red circles. But on a higher time frame, when you're looking at a day, obviously it's not the case that you're looking at a very big downside. All right, you can see yesterday's candle in a way, 2 bearish candles in a row. That is not really a massive signal of downside. If I really wanted to see a downside continuation, I would have expected at least a candle like this knocking on the door of this bottom, right? That would have been momentum. That would have been a drive lower that probably could have pushed price through this weekly and monthly bottom. But as it stands now, we actually have bullish candles on the weekly chart. We even below there's relatively not see price drive through this weekly bottom and go on a monthly chart with this downtrend continuation. All right, so all in all, of course, then I think that the euro dollar and price is going to make some kind of bear flag like this before next year. I think it will break. All right, but I don't think it's ready now. Confirmed with the event that showed insufficient momentum for me to consider a break of the bottom of 105.50 in the next 2 weeks. Let's face it, we got Christmas, New Year's Eve. Those are low volatility parts. Now, it doesn't mean it couldn't break. The dollar yen, I think it was last year, or the euro dollar too, kept pushing quite a lot during the holiday season. So it's not impossible, but I think not as likely at this moment as maybe last year. All right, last year was a very big downtrend, and what we've had the last few months is just a lot of sideways movement here. Break. I think it's it for the euro dollar. I think we're going to go into consolidation. That price fib off that 50 fib at about 107.50. I think that price could fall to that level at the moment. If we look at the hourly chart, the bearish is a bit of a air for more. Once if that consolidation zone breaks, then there could be a bit of a breakout trade down to the 50 fib, and that could be a bouncing spot, I think, for maybe the next couple of days. That's what I'm expecting. Not dramatic ups or downs, just ups and downs. Keeping an eye on these fibs. Well, the 38.2 fib has already been used. So I'm keeping an eye on the 50 fib right there. Alrighty, pound USD from this point of view, you can it's going to probably continue with that, but obviously this downtrend channel, the support level has held very. So is it going to break or bounce it again? If it does break down to this bottom right in here, like that, and if it bounces, then obviously we can go back maybe to the resistance zone right in here. So from this point of view, like I said, I break this channel to the downside. So if anything, I think that there's a trade perhaps at the beginning of this week when we broke this trend line like that, but at the moment it's too close to support and not really lower. There's a bit of space left. Maybe just hook back and one more fall, and that could be it. Unless it maybe hooks back for a very small fall down to the bottom of the channel. Alrighty. Other than that, I think that have been dollar yield in this triangle, as you can see on this weekly chart. So still waiting for the break of the month and dollar strength around March. That's basically my main message. If I look at the charts, the euro, I thought there could be a bit of a bounce here, but ultimately I do expect the euro yen, for instance, to continue like this. Basically here, it could be a bit of a rally, but ultimately still expecting a bigger zigzag. I do think that the euro could continue. that's on the very it's slightly chart that you can see that there, and that's why I was warning people. You know, look at this: up first, then down, then up, then down, then up, then down. And this is what I was really expecting. Actually, I'm not surprised about that. And there was a trade on this trend line, for instance. Also, Harp showed the entry. The 20 continuing. There's a bit of a bottom here, though, so I'm keeping an eye on the price as we speak to see if price can break through that. Can't if it shows on a 5-minute chart there was a small triangle. It's breaking that triangle. That's a bit of an interesting one. So also took a long position in here, and it's showing potential for continuation. Keeping an eye on that too. Don't think monitor around this 123 area. So those are breakout trades that are occurring. To join markets webinar tonight. All right, we got good webinars going on. Let me show you. In fact, we got here, go to admiralmarkets.com, click on education and webinars. And today we're going to dive into long-term. We're going to take a look at, first of all, 2016 Forex trends in more detail. All right, this was just a kind of a quick summary. We're going to dive into detail and also look at our forecast of last year and see which ones were panned out and which ones were horribly wrong. So you'll see that too. But more importantly, of course, we'll take a look at 2016. So that's something that's today. And then next week, we got the usual sequence of webinars. So join us at Admiral Markets. Also, once again, if you're interested in opening accounts with Admiral Markets, you have the opportunity to do that through Elite Currency. You get a course of 900 euros. You get 10 euros per 1.5 lots traded. So a lot of advantages of doing that. Plus, of course, Admiral Markets, award-winning broker of this year, best MT4 broker. And if you recommend a friend, by the way, you let us know, you'll get 200 euro credit with us, Elite Currency, and your friend as well. Plus, don't forget, of course, that we have the Harp discount. Like our trader friend here, Bob, you could be also able to copy that success rate of Harp. And don't miss out on that discount of 1,500 euros until January the 4th. The voucher code is December special, by the way, just in case that I don't think I mentioned at the beginning, December special. All right. Now, let me check with Nenet. Maybe he still wanted to share something. Nenet, are you?
Yes, I'm here now. So basically, you explained it everything. The biggest thing is that we need to wait for the price to sell down after yesterday's FOMC. So there might be not such huge trading decisions in the next couple of days. As I said, I'm currently only paying attention to pound dollar, to euro dollar if it bounces higher, because it's really too low to sell. So we need to see if it bounces higher, and we need to see if the price will respect some movement. Now we need to know that it's already 17th of December, so very soon some profit taking will happen and volatility will definitely subside. The biggest move might happen just at New York, not the biggest, but big move can happen just on New Year's Day, because very often in the past we have witnessed that there were some crazy movements just at the last day of the current year. So that can happen. I am not saying that it should happen, but it might happen. So in the moment, if you still want to trade, of course, visit our analysis. We are always cherry picking those good trading opportunities with different pairs. And also you might consider Harp, which will provide you with approximately 2 entries per day, which is also very, very good, because you don't want to overtrade. So that was it also from my part, Chris. I think that we have explained everything what currently is happening. If something bigger happens, you will be first to know it, definitely.
Absolutely. Thank you so much for joining, folks. And we actually look forward, of course, to seeing you tonight. But just in case you can't make it next week or tonight, then thanks and have a great holiday season. And we'll be seeing you soon in the new year.
Cheers, everyone. Cheers.